The global economy runs on two key indicators: oil prices and stock markets. These two forces are deeply intertwined, shaping the way businesses operate, governments plan, and individuals live their daily lives. Every headline about oil or stocks can ripple through the world, affecting millions of people in ways both obvious and subtle. Oil prices affect everything from your commute to the cost of groceries, rippling through every sector. When oil becomes more expensive, transportation costs rise, which can make shipping goods pricier and push up prices at the store. Even the cost of heating your home or flying for a vacation is tied to oil. For businesses, higher oil prices can mean tighter profit margins and tough decisions about where to cut costs. Stock markets reflect investor confidence and signal economic health or anxiety. When markets are up, it often means businesses are growing and people feel secure about the future. But when they fall, it can trigger fear, slow down investments, and even lead to job losses. The stock market is like a giant mood ring for the economy, reacting instantly to news, rumors, and global events. When oil prices drop, it can boost transportation stocks but hurt oil producers. Airlines and shipping companies may benefit from cheaper fuel, while oil companies might see profits shrink. This delicate balance means that a single shift in oil prices can create winners and losers across industries, influencing everything from job creation to government revenues. When stocks fall, it often means global uncertainty. Investors may worry about recessions, political instability, or unexpected crises. Falling markets can erode retirement savings, make borrowing more expensive, and shake consumer confidence, leading people to spend less and save more. Political events, like conflicts or trade wars, can shake both markets instantly. A sudden announcement from a world leader, a new round of sanctions, or a flare-up in a distant region can send oil prices soaring and stocks tumbling within minutes. These events remind us how interconnected our world has become. As 2026 begins, Venezuela's political upheaval is making headlines, with protests and government crackdowns creating uncertainty for oil exports. The country's instability doesn't just affect its own citizens. It sends shockwaves through global energy markets, impacting prices everywhere. And China-Japan tensions are sending shockwaves worldwide. Disputes between these economic giants can disrupt trade routes, unsettle investors, and create volatility in both oil and stock markets, with consequences that reach far beyond Asia. These aren't distant events. They're already impacting currencies, commodities, and your financial outlook. Exchange rates can swing, the price of everyday goods can change, and investment portfolios can rise or fall, all because of shifts in oil and stocks. Understanding oil and stocks is key to making sense of today's interconnected world. By following these indicators, you can better anticipate changes, protect your finances, and make smarter decisions in a rapidly changing global landscape. Venezuela's long-running crisis, marked by years of political turmoil, economic collapse, and widespread hardship, has taken a dramatic and unexpected turn. After a decade of mounting pressure, both from within and outside its borders, the country now stands at a pivotal crossroads. President Nicolas Maduro, whose rule was defined by controversy and international isolation, is out of office, and opposition leader Maria Corina Machado, a symbol of hope for many Venezuelans, has stepped in to lead the nation. The atmosphere in Caracas is electric, as citizens celebrate what they see as the dawn of a new era and the possibility of real change. Almost immediately, the United States moved to engage with Venezuela's new leadership, eager to reset relations and seize a rare diplomatic opening. The result? A landmark agreement. Up to 50 million barrels of Venezuelan oil are set to hit the global market, a move that could shift the balance of energy supply worldwide. Of that, $2 billion worth of exports will head directly to the United States, marking the largest such deal in years and signaling a new chapter in U.S.-Venezuela relations. For Venezuela, this agreement is nothing short of a lifeline. Years of sanctions and mismanagement have left the economy in ruins, but this influx of oil revenue could jumpstart recovery, stabilize the currency, and fund essential services. For the United States, It's a strategic win, securing a new, reliable source of energy and strengthening its hand in global energy politics. By tapping into Venezuelan oil, the U.S. can reduce its reliance on more volatile regions like the Middle East, making its energy supply more secure and less vulnerable to geopolitical shocks. For ordinary Venezuelans, the hope is that oil money will finally be used to rebuild hospitals, schools, and infrastructure, bringing long-awaited stability and opportunity. Meanwhile, American consumers could see relief at the pump, as increased supply helps drive down gas prices and ensures more affordable, secure energy for families. At the same time, the U.S. is signaling a new era of bold foreign policy, with high-profile moves and ambitious strategies reshaping its global role. Some officials are even revisiting the idea of acquiring Greenland, a move that would have seemed unthinkable just a few years ago, but now underscores America's renewed assertiveness on the world stage. These bold initiatives highlight a shift in U.S. strategy, one that's more proactive, more ambitious, and more willing to take risks to secure national interests. But at the heart of it all is the Venezuela oil deal, a seismic event that's already sending ripples through the global energy market, with traders and governments scrambling to adapt. As the world watches, this historic agreement could reshape not just Venezuela's future, but the entire landscape of global energy and geopolitics. When supply surges and demand holds steady, prices fall. Simple economics. Venezuela's oil deal unleashed a flood of crude, sending prices tumbling. U.S. crude dropped to $56.18 a barrel, Brent to $59.94. Lower oil prices mean cheaper gas and energy, putting more money in consumers' pockets and cutting costs for businesses. Airlines, shippers, and manufacturers benefit, but oil-producing countries and energy companies face shrinking profits. For some, it's a tax cut. For others, a financial blow. The influx of Venezuelan oil is bad for oil prices, but could boost the global economy by lowering energy costs. The world is watching to see how long this new balance lasts. In Asia, China's ban on dual-use exports to Japan, after a tense remark about Taiwan, sparked market turmoil. Investors fled regional stocks. Japan's Nikkei fell 1.1%, Hong Kong's Hang Seng dropped 1.3%, and Asia-Pacific shares slid. The ban threatens Japanese manufacturing and tech, raising fears of a broader trade conflict. Australia's market bucked the trend, lifted by strong commodity demand. The region is on edge, bracing for more volatility as two economic giants clash. When China and Japan collide, global supply chains and profits are at risk. The mood caution as political risk overshadows economic optimism. Asia's markets are now a barometer for global uncertainty. Uncertainty drives investors to safe havens. Gold surged, then dipped as panic eased, but remains near record highs. Industrial metals like copper and nickel have been volatile. Copper fell after a record run, nickel spiked on supply fears. High prices for metals signal strong global demand, even as markets wobble. Gold's rise shows anxiety. Copper's strength shows industry is still humming. The result? A split market, with fear and growth coexisting. Investors are torn between seeking safety and betting on continued economic activity. Commodity markets reflect this tension, with both safe haven and industrial assets near historic highs. It's a unique moment, uncertainty and opportunity side by side. In the West, markets reacted with caution, not panic. European futures barely budged. Germany's DAX rose slightly, while London's FTSE slipped. Lower oil prices could help Europe's manufacturers, but global tensions weigh on sentiment. U.S. stock futures dipped only fractionally, as investors balanced Venezuela's oil boost against Asian turmoil. The prospect of cheaper energy is a plus, but uncertainty keeps traders on edge. Everyone's waiting for key U.S. economic data, especially the jobs report, to set the next direction. For now, Western markets are in a holding pattern, watching headlines and bracing for what's next. The world's eyes are on the numbers, not just the news. Currency markets moved fast. This week, The Japanese yen strengthened sharply as investors around the world sought safety, even as Japan itself faced its own economic and political turmoil. The yen's reputation as a safe haven asset means that, in times of global uncertainty, money often flows back to Japan, regardless of what's happening domestically. This surge in demand for the yen is a classic example of risk-off behavior. When investors get nervous, they pull their money from riskier assets and bring it home, seeking stability and security in familiar territory. The yen's rise is a textbook move in times of stress, reflecting a deep-seated instinct among global investors to seek shelter in currencies they trust. Even as Japan grapples with its own challenges, the yen's status as a safe harbor remains unshaken, showing how powerful these market reflexes can be. Meanwhile, the US dollar dipped slightly. Lower oil prices and growing expectations that the Federal Reserve will cut interest rates soon have weighed on the dollar's appeal. Investors are recalibrating their strategies, watching every Fed statement and economic indicator for clues about what comes next. The euro, on the other hand, held steady. It's caught in a delicate balance, benefiting from cheaper oil, which helps European economies, but also facing risks from global trade disruptions and political uncertainty within the region. The euro's stability masks the underlying tension as Europe navigates these crosscurrents. These subtle shifts in major currencies ripple through the global economy, affecting everything from the cost of imported goods to the profits of multinational corporations. Exchange rates influence how much companies pay for raw materials, how competitive their exports are, and even the prices consumers see on store shelves. Currency moves reveal the psychology of investors: fear, hope, and hedging all at once. Behind every trade is a calculation about risk and reward, a bet on what the future holds, and a response to headlines that can change in an instant. The world's money is flowing to safety, but not in a straight line. Each shift reflects a complex web of decisions as investors weigh the risks and opportunities in every corner of the globe. Exchange rates have become a real-time readout of global anxiety, flashing the world's collective mood second by second. In today's interconnected markets, every move tells a story about confidence, caution, and the search for stability. Cryptocurrencies didn't act as safe havens this time. As global tensions rose, Bitcoin and Ether both slipped about 0.8%, mirroring riskier assets, not gold. Investors still see crypto as high risk, high reward, not a shelter in a storm. Bitcoin's moves set the tone for the whole digital asset market. The dream of digital gold isn't reality, yet. Crypto's fate is tied to market sentiment, not global fear. Its role in future crises remains an open question. What does all this mean for you? Expect cheaper gas soon, and maybe lower prices on goods and travel. But uncertainty is high. Stock market swings can hit your investments and retirement accounts. Don't panic. Volatility is normal, and rash moves rarely pay off. Watch Venezuela's transition. Any hiccup could send oil prices back up. Keep an eye on China-Japan tensions. A wider trade war could disrupt supply chains and jobs. The U.S. jobs report this Friday will be a key signal for markets and the Fed. In a fast-moving world, staying informed is your best defense. The global story is changing fast. Be ready to adapt.